Hello, everyone, and welcome to The Buck Stops Here. I am Catherine Murray. Well, I wanted to bring to you today an in-depth conversation about the policies that have been and continue to affect you at home as it relates to inflation, opportunities, and our outlook. And for that, Joe Oliver is joining us, the Honorable Joe Oliver, who's, of course, the former federal Finance and Natural Resources Minister. Joe, great to be with you today, and thank you for this really important discussion that we're going to have for Canadians today. Thanks for joining us.
Well, thank you for having me.
Joe, let's just start with our most recent economic data, and we're going to have a big picture conversation about this in terms of how we got here and what we can do. But the inflation reading just yesterday, 4%. Continues to move higher. It certainly has been and continues to affect a lot of Canadians, just even in terms of their basic mortgage that they're paying. Can you talk to us a little bit about your views as to how we got here?
Well, in one sense, it's sort of simple to describe. The cause of inflation is when results from an increase in money supply. And that happened most recently when the government decided to embark on an extraordinary expansionary policy of increasing the money supply through the Bank of Canada and through its extraordinary stimulus package. So it had to do something. It had to do something very significant because essentially the COVID measures were closing down the businesses, and people needed government support to survive in some cases. But there's a real question of whether the amount was excessive and whether it went to some of the wrong people. And I think there's no doubt that both of those problems occurred. So the result was that income actually, in a period of relatively high unemployment, went up, and people had more savings than they had before, paradoxically. And then there was pent up demand because they couldn't get out and spend it as much as they wanted to. I mean, there's only so much that I think people thought they wanted to spend buying stuff on Amazon. So when their buying power was unleashed, that created an immense pressure on prices because demand increases. But the other side of it was supply was constrained because of a shortage. The supply chain was constrained because manufacturing had declined as a result of companies in Canada and elsewhere and not being open as much as they had been before. So you had the two factors: increased demand and reduced supply. And then you had the Bank of Canada taking extraordinary measures to increase the money supply to prevent the country from going into a recession. And as Milton Friedman said, at the end of the day, inflation is attributable to an increase in money supply. And we had an extraordinary increase in money supply. So the Bank of Canada, which misjudged the issue initially, and they weren't alone, so did the other central banks in the UK and in the United States and elsewhere, thought that inflation was going to be transitory. As it turns out, it was far from that. And so they were late to the game in increasing interest rates to start pushing down inflation. And when they started to move, they had to move with extraordinary speed and brutality. And that tamed inflation somewhat, but apparently not enough to reach the target, which is 2% or within a range of 1 to 3%. So the bank is really in a very challenging position right now.
And thank you for that backdrop. I think it's always important to kind of say how we got here. And I think what's also important, we'll discuss it in the next segment, are the policies that almost keep us here, because you've got this central banker that is raising rates to combat inflation, and yet we still have inflation coming in higher than expected. And then you have to therefore look at what's going on the fiscal policy front, the policies that we're seeing from our federal government in terms of increasing costs of just doing plain business. We'll be right back.